Ladies and gentlemen, good day and welcome to Dave Information Technology Limited Q2 FY25 results conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference call is being recorded. I now hand the conference over to Ms. Chandni Tandi from Kirin Advisors. Thank you, and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Dave Information Technology Limited. From management team, we have Mr. Jaimin Shah, CEO and Managing Director. Now I hand over the call to Mr. Jaimin Shah. Over to you, sir.
Thank you, Chandni, and good afternoon and happy Diwali to everyone. Thank you for joining us today for Dave IT's earning call for second quarter as well as first half year of FY25. To begin with, let me give you a brief introduction about Dave IT. Dave IT is a global end-to-end IT service company listed on both the platform NSE and BSE, and we have been empowering business worldwide since 1997. We headquartered in Ahmedabad, and we offer a full spectrum, which is end-to-end IT services, including cloud services, blockchain, digital transformation, enterprise applications, and managed IT services. We have also ventured out into creating our own intellectual property product in the name of Intelligence, which is a AI/BI analytical platform, a tool for tele users, and a Byte Signer, a cutting-edge digital signing solution. Over the year, our growth has been driven by our dedication to innovation and a commitment to quality and a client-centric approach. And we are recognized with certifications such as ISO 20000, ISO 27001, ISO 9001, and CMI Level 3. Now let me discuss the financial highlights for the quarter ended September 30, 2024. As you all know that in almost all calls, we have been harping upon increasing more and more profitability, also increasing revenue from the services sector, and that too from corporate side. So to continue that focus in this quarter, Dave IT achieved remarkable growth across both consolidated as well as standalone figures. Our consolidated income rose to 48.24 crore, up by 69.26% year on year. Standalone total income also grew significantly by 43.70% year on year and reaching of rupees 43.84 crore. We are also happy to report an impressive increase in EBITDA, which is one of our focus area, which surged by 329.64% on a consolidated basis to rupees 11.23 crore, which is reflecting a margin expansion of 1411 BPS to 23.28%. Standalone EBITDA also grew by 351.02% to 11.56 crore rupees, with a margin of 26.36% and increase of 1796 BPS. Our profitability was equally robust, and that is also an increase in with consolidated PAT raising by around 390.66% year on year to rupees 8.11 crore. And standalone PAT also reached to rupees 9.14 crore, which is representing a remarkable 463.13% growth. This brings our PAT margin to 16.81% and 20.78% on a consolidated and standalone basis respectively, which is by over 1100 basis points in both the cases. Our significant achievement in this quarter further demonstrated our capabilities and strategic focus on enterprise as well as our corporate segment. We secured key contracts from India market as well as overseas market, which includes Kaushal Darpan project of Rajcom for portal integration across over 140 polytechnics and 1,500 ITIs. Another major project with Rajcom is the Raj Kishan Sathe portal, which is approximately 5 crore of the maintenance program for 13 odd applications. We are also pleased to announce a 5-year, approximately 1 crore contract from Gujarat State Fertilizer and Chemical GSFC for managing their IT services, which we manage since last so many years. So this is a testament to our client relationships and service quality. Besides this, we have also got really good, remarkable contracts from corporates as well as overseas market, where due to NDA, we cannot disclose their names publicly. In terms of industry recognition, we received the prestigious IT as a Service Award at the MSP India Summit 2024, organized by SME Channel magazine. Another significant highlight was the launch of single window IT system, which was developed by us for the gift, which they call it SWIT for ISKA gift. And the said project was inaugurated by Honorable Prime Minister a couple of months ago. This entire system and various other systems we have developed for our clients, and this is how we also contribute ourselves for the national e-skilling initiatives. We are also looking forward to continue expanding our offering with a focus on emerging technologies, including IoT, cybersecurity, and AI. To continue that, our one of the initiatives called Dev Labs, where we are going to have AI Center of Excellence very soon. Our growth strategy also includes depending on our presence, which is physical presence in North America, and exploring new markets to capture emerging opportunities. With our client-centric approach, we are confident in our ability to drive efficiency and transformation for our clients while positioning Dev IT as a leader in IT service sector. Our subsidiary, Dev Accelerator Limited, which is called DevX, a prominent provider of managed office space, is also coming out with their IPO. They filed DRHP last month. In summary, Q2 of FY25 has been an exceptional quarter for us. We are encouraged by our strong financial results, continued client partnerships, and the strategic projects which we are undertaking. This is the showcase of our philosophy called people first and business always. As we move forward, our team remains dedicated to deliver unparalleled value through innovation and deep understanding of our clients' evolving their digital needs. We thank all our shareholders, partners, and our clients for their trust and support. We are also excited to build to our achievements in the quarter ahead. So thank you very much for your patience hearing. Now floor is open for the question. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from line of Harsh Shah from Rira Holdings. Please go ahead.
Hi, good afternoon, sir. My first question is on Wave Accelerator.
Sorry to interrupt, Mr. Harsh. Your voice is not audible. Can you please switch to handset mode?
Is this better?
Yeah, please go ahead.
My first question is on the Wave Accelerator IPO. I believe that we are coming at the IPO at the
Sorry to interrupt, Mr. Harsh. Your voice is still not audible.
Is this better now? Can I?
Yeah, now it's better. Yeah.
Okay. My first question is regarding the Wave Accelerator IPO. I believe that the IPO is coming at the same valuation at which we recently sold shares, 28 lakh shares at I think some 11.6 crores rupees. So just wanted to get an idea that are we not doing this IPO at a relatively lower valuation, maybe somewhere around 175, 170 crore, because we were expecting a very high growth in this business. So just wanted to understand on that.
So thank you very much, Harsh. I don't know whether I am allowed to speak about the valuation, so not aware about the technicality, but IPO is not coming at the same valuation which we diluted our stake share in September end. So I don't know whether I can reveal those numbers or not, but valuation numbers would be higher. Another thing, yes, you rightly said that the sector is really booming high, and that is how DevEx is also aiming to get a really good valuation, and they are also hoping that once they got the node, they will immediately come out in the primary market.
Okay, because I was referring to the note to the accounts, note number 5, where we have mentioned that the company has divested 28 lakh shares for a consideration of 11.6 crore.
Yes.
So that comes to around 40.5 rupees per share. And then
valuation was 270 crore. So
270 crore.
With the valuation of 270 crore of the DevEx, and accordingly,
28 lakh shares, 28 okay, I'm sorry. So this 28.7 lakh shares, it's how much percentage of the company, Wave Accelerator?
I don't know about the percentage of the company. Might be around 2 or 2.25%, not more than that.
So in last 6 to 8 months in FY24, we have divested more than almost 6 to 7% stake in Wave Accelerator. Is that right?
No. Wave IT has divested. Are you talking about Wave IT or are you talking about DevEx?
Wave IT's stake in DevEx.
No. We have diluted that stake 2 years back.
Because in your annual report, FY24's annual report, you have mentioned that as of 31st March 2024, Wave IT holds 28.45% stake in Wave Accelerator.
Yes.
And now, as per this latest filing, the stake stands at 21.9%.
Yes.
So have you done any fundraising in this company?
So Devex has raised fundraising in their company.
Okay, understood. And okay, got it. Sure. And the next question is regarding the acquisition that LT1 INC had done. It's been almost 1.5 years since the acquisition was done. So just wanted to understand what kind of synergistic benefit has our company derived from this acquisition? Because I believe LT1 INC has got good chunk of business in the United States, and we were expecting that them buying stake in Dev IT would open up a lot of opportunity for us. So just wanted to understand on that side.
Yes. So that's what LT1 we already received a couple of orders. But the stake remained 3.8% as of now. They could not able to acquire a promoter stake due to their internal arrangement with the financial institution. So they are just holding 3.8% stake in Dev IT. So not that kind of substantial stake in Dev IT. And also, we have received order from LT1 in last financial year.
And is promoter looking to pair their stake to LT1? Because back in the day, I think there were some discussions about share purchase agreement where the existing promoter might sell some stake to LT1. So is that discussion still going on?
So that is what I discussed, that share purchase agreement got expired, which we as a promoter and LT1 signed.
Okay, and there are no talks of renewing this discussion
There are
again?
no talks of renewing anything further.
Okay. And on bookkeeping side, so we did consolidated revenue of around 36 crores this quarter if we exclude the other income. What would be the mix between government orders and private?
So government order is around 51% and private is around 49%.
Okay. And going ahead, we were taking FY24 as a base, the previous discussion was that we will be keeping the government business as it was, as it stood in FY24, and we are planning to double the private business from the private clients. So any update on that?
So that is what we are working towards it. And if you compare our last year's number with current year, government business has not been increased. It's rather decreased by a few percentage. So still we are continuing with the same thought process that will increase our private sector business, and government sector business will continue as it is. But if at all some good business comes, then we cannot deny that good business from government. So it depends upon case-to-case basis, where we as a management and our operation team feels that some of the government projects are really worth taking and really giving good value to our service delivery as well as profitability, then we'll definitely pick up those orders.
Okay. And sir, again, excluding the other income, our EBITDA this quarter was negative 1 crore compared to 5.8 crore in Q1 FY25. So just wanted to get an idea what led to the sharp decline in the operating EBITDA if we exclude the other income.
This is regarding because we have substantially, if you recall my last investor call, that not last, but almost all last 2 or 3 calls, we wanted to invest more into manpower and also acquiring a company where they have really good leadership team as well as they have IP. So in last 3 months, we have significantly invested into building our AI and BI capabilities as well as Microsoft Enterprise capabilities so that in next quarter, 2 quarters, we can really work and close those high value and high profit business from corporate as well as overseas market.
Okay, because in this quarter, I can also see 12 crore rupees of cost of goods sold. If I look at the COGS line item, it is around 12 crores, which is much higher than 6 crore, which was there in Q1.
Yes.
So what is that COGS regarding?
So this is regarding our products which we sell it in the market, like ByteScanner, like Intelligence, and Microsoft licenses.
Okay, so you're trying to say that you have purchased these softwares, these products,
Exactly.
which will be sold in later years, later quarters.
Exactly.
Okay. And sir, it would be really helpful if you can, come out with presentations every quarter, mentioning some data like your share from private and government, how is Dave X performing, and few such data points. It would be really helpful for us to track such metrics.
Certain. We'll share it with you. It is already there. We'll share it with you. Thank you.
Sure. And so last question, if we look at as we stand today, our H1, we did revenue of almost 71 crore on consolidated basis and EBITDA of 4.5 crore if we exclude the other income. So in terms of guidance, what would be your 2-year guidance in terms of revenue and margin for Dave IT? We're not talking about the Dave Accelerator, but only for Dave IT. What kind of performance are we expecting?
So that is what I have also shared in last call as well. That this year we are expecting around 180 to 190 crore revenue with PAT from 15 to 18 crore. And next year we are expecting more than 200 crore and PAT is more than 20 crore.
So this year, PAT, you are including the 11 crore gain from Dave IT or excluding that?
Yes, all including.
Oh, okay, so if you exclude that, then we'll be somewhere around 10 to 11 crore.
Exactly.
For this year. And next year, we are expecting 200 crore revenue and 10 to 12% margin.
Exactly.
Okay, sure. Okay, thank you so much, sir.
Thank you.
Thank you. Before we take our next question, we would like to remind participants that you may press star and 1 to ask a question. Our next question is from line of Abhay Yadav from GC Capital Partners. Please go ahead.
Hello.
Yes, Mr. Abhay, please go ahead with the question.
So my first question is, what steps has Dave IT taken to achieve such impressive growth in PAT margin from 5.8% to 16.8%?
So a couple of things. We have decreased our less margin resources and business to higher margin resources and business. So if I go very precise that we are focusing more on AI, BI and Microsoft Enterprise and Managed IT solutions. So in last 3 to 4 months, due to NDA, I cannot able to share those clients' name, but really we have good corporate, and that too India is one of the biggest corporate client in AI BI side. So our main focus is to increase those business units so that we can increase our profitability as well as we can have a longer contracts in place.
Okay, sir. My next question is, as you know, the EBITDA margins have increased significantly, especially in the standalone business. Could you share the key operation efficiencies or cost control measures that help achieve this?
So a couple of things which I discussed earlier as well, that we have decreased our bench resources, as well as we have replaced traditional technology resources with latest technology resources, and that too AI and BI and the Microsoft Enterprise side. And that is how our acquisition of the consultancy is giving us more benefit, and that will give again more benefit in coming next 2 or 3 quarters, because we are right now investing more into good quality resources into AI, BI, then managed IT services and Microsoft Enterprise services.
Okay, sir. My next question is, can you provide a breakdown of revenue growth in Q2 F25 by geography and industry verticals?
So, as far as geography is concerned and vertical is concerned, as I told earlier to Harsh, that government, which is pure EGO projects, which comprise of 51%. So that is purely India market and purely for government market. And remaining 49% is corporate and overseas market. So out of that 49%, 30% is our overseas business, and remaining 19 to 20% is India corporate market.
Okay, thank you, sir.
Thank you.
Thank you. Our next question is from line of Navneet Singh, who's an individual investor. Please go ahead.
So actually, I am interested in knowing about the guidance on the 2 product items we have, that is Intelligence and Byte Signer. So what is their guidance for our next quarter, and how we see going forward, any new intellectual property we are coming with or not?
Thank you, Parmeet ji. So as we all know that IT services companies, they are purely into service sector and providing services to overseas clients as well as India market clients. We ventured out and we decided that we should also have our intellectual property product and for India market and for the partner community. So we, after all the studies and everything, we invested into 2 products because we have really good market penetration into these 2 product side. One is a Byte Signer. Byte Signer is the outcome of one of our service delivery called digital signature provider. If you all recollect that a few years ago and now everyone should have a digital signature. But when Indian government started digital signature, we were one of the early entrant and we were one of the leading distributor for digital signature, and that is how we had a really good customer base as well as partner base. And by selling those signatures, we realized that clients are having issues signing digital signature for bulk documents. So for all the pages, they have to sign individually. So we came out with a Byte Signer where client can select those number of pages and can sign digital signature in one go. So this is the purpose of digital signature, which is a very low cost product, and where we are approaching more and more quantum of the customer. Another one is Intelligence, which is also outcome of our partner base across India because of the digital signature and because of our Microsoft Enterprise license business. As we all know that India has a huge clientele of tele accounting software. Around 4 million plus users are there, and they hardly have really good AI, BI dashboards on tele accounting software. So we came out with a product called Telligence, which is a AI, BI engine, which works on tele accounting software and provides you really out of the box dashboards and KPI related dashboards on your mobile as well as on your desktop. So it's really very comprehensive product where right now we are helping channel partners across India, and we are really getting a good response. So within a year or so, we are expecting that Telligence will give us a really good clientele as well as really good mileage and profitability in our IT business.
One follow-up question on that. So, what is a revenue contribution from Telligence and ByteSigner in Q2, and what will be our forecast on these two products?
So revenue consolidation right now is very insignificant, I can say. It's not a huge one. Right now we are building the product as well as building a channel partner ecosystem and doing lots of digital and media marketing. So our idea and our forecast is around 2 to 3 crore of revenue from Telligence from next year, and then after 5 to 10 crore of revenue. And this is a annuity based product, so year on year the same number will continue with increased increment in the revenue.
Understood. Is there any other product IP that we are working internally?
Yeah, we are working. We have already worked towards a few products, and that those products are purely on Microsoft Enterprise solution, which is Microsoft's ERP, called Microsoft Dynamics F&O and Business Central, where we have developed around 22 odd solutions, and those solutions are already on Microsoft Marketplace. And a few partners, they are already using those solutions, and when they deploy Microsoft Enterprise into their client area. So those 22 odd solutions, they are basically developed by PA Consultancy Private Limited, which we acquired 100% recently.
So do we have any revenue forecast for this financial year or next financial year on those 22 products that we have on Microsoft Dynamics?
Yes, that we are working on it, and by end of December, we'll come out with the exact numbers. We are waiting for one approval from Microsoft side that we have already shown our interest to have AI Center of Excellence in Ahmedabad. So we are waiting for their approval. So as soon as we get that approval, we'll come out with our plans and as well as the numbers.
Understood. So that is all from my end, and all the best.
Thank you. Thank you very much.
Thank you. Our next question is from line of Tara Kaur from DY Capital. Please go ahead. Hello. Yeah. Please go ahead. Yeah.
So my question was that what is the top 10 client contribution?
Yes, thanks. Top 10 client contribution is around 28% of our total revenue. But if I include top 10 clients and just one state government, means Gujarat government or government of Rajasthan and central government, then that comprise of around 40%.
Okay. And how many new clients we have added in H1 FY25?
So that I have to come out with exact number. If you can allow me to get that number in a daytime, will it be okay?
Yeah, sure.
Does that answer your question, Tara ma'am?
Okay. And my last question is that how is our working capital in days?
Sorry?
How is our working capital in days?
Working capital in Devaki.
In days.
Sorry, your voice was broken. Working
Can you
capital?
hear me now?
Yeah.
My question is that how is our working capital in days? Like, how is our working capital cycle? That is what I'm trying to ask.
Okay. So, working capital, because we are now investing more into newer technology as well as newer geography. So, our working capital requirement is really high as compared to what we have done so far in last 5 to 10 years. So, we are expecting around 70 to 100 crore of working capital because of acquiring couple of companies as well as having our own physical presence in North American market, where we want to have our own AI, BI capable people at client place as well as in North America.
Miss Tara? Hello?
Yes, that's all.
Hello.
Yeah, that's all. Okay. Thank you.
Thank you.
Before we take our next question, we would like to remind participants that you may press star and one to ask a question. Our next question is from line of Raj from Arjao Partners. Please go ahead.
Hello, am I audible?
Yes, Mr. Raj.
Achha, sir, I just skipped a part on the growth part. How much sales are we expecting in FY25 and in FY26?
How much sales revenue you are
Yes.
asking? Yes. So as I told earlier, that this year we are expecting around 170-180 crore of revenue in FY25 and more than 200 crore in FY26.
And how much would be our EBITDA and PAT?
So PAT, we are this year we are expecting 15 to 18 crore, and next year more than 20 crore.
All right. And how much is our current order book?
Our current order book is around 45% of the total revenue.
45%. So can we expect around 70-80 crores is the order book?
Exactly.
All right. All right. And sir, all right. Thank you.
Thank you.
Thank you. Our next question is from line of Mahesh Seth, who's an individual investor. Please go ahead. Hello?
Can you hear me?
Yes,
Yeah.
please go ahead with the question.
And first question is
Sorry to interrupt, Mr. Mahesh, your voice is not audible. Can you please get to a place with better network reception?
yeah, can you hear me now?
Yeah, please go ahead.
Yes. My question is can you share some insight into our repeat business rate and any strategies we are implementing to enhance our client retention?
Are you talking about client retention, or are you talking about client rating? Because your voice is breaking.
Retention.
That's how.
Retention.
So our client retention is more than 90%, and that is how that is one of the strength, and that is how our philosophy is all about that people first and business always. And so majority of clients, they are there with us from so many years, and same goes with our employees.
Okay. Okay, I got it. And as you said earlier, for the revenue outlook for FY25 is around 170.
Hello.
Mahesh, Mr. Mahesh?
Yeah.
Yeah, 170
yeah.
to 180 crore.
So, can you just let me know the factors which can influence this forecast?
So, there are a couple of factors which include in our forecast. One is definitely our India market business, where we know that how many new projects are going to come. Second one is our order book. And third one, once we see elections over in USA, now many inquiries have started, but due to their year end, we are expecting that more and more business will happen in first quarter of next year.
Okay. Thank you. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was our last question for today. I would now like to hand the conference over to Ms. Chandni for closing comments.
Thank you, everyone, for joining the conference call of Dev Information Technology Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining.
Thank you.
Thank you.
On behalf of Kirin Advisors, that concludes this conference.